Hello guys, welcome to the Train Parrot. Is 80,000 or 81k a good time to re-enter the market after we took profits? Are we about to reverse to the upside or is there further downside? I know at the moment we are at extreme fear, but you know what we do in this channel. We look for entries back into the market when we see extreme fear. That doesn't necessarily translate automatically into entering now. But our ritual is to look into the market and decide what's the right thing to do. And if this was a head and shoulders and the neckline was placed at 82,500, we should be looking into this recent price action of the past 3-4 hour candles that we are retesting the neckline as if we were about to break down and confirm the retest. So let's measure the high of that head and shoulder and let's place it like this. That is pointing to 76k. But here's the thing, I already took profits at 85.5 and at the time I was entering at around 82k, my initial intention was to average down that entry against a second order around 76, 75, 74. So if I was to enter, let's say at 80 or at 81, I'm getting a slightly better entry for my first order. Let's see what the daily time frame says. On the daily time frame, we have at the moment 84k as a resistance, just like we did in all this period from 10 of March until 18 of March and back again in this area in here right before the Liberation Day pump and dump. At the moment, we are holding that 81 and that's where there is a lot of liquidity. And I'm thinking, what if we just go slightly lower in here, let's say a tiny bit below 80k, and then immediately after we reverse back up instead of fully going into the 76, 74k. Wouldn't it be great then to have some exposure here and then leave this area for the second order? What if that scenario play and you end up waiting for that 70 something to enter and then suddenly we have a rally. A rally into what, you might say? Well, at the moment, the first argument is that we have a CME gap between 84,865 and 85,300, which today I was thinking we were so close to it, but general markets have been really bad. Therefore, it's kind of delaying the opportunity to get there. One argument to not do so is that although long-term holders remain just flat in this area, Big Well Explorer indicator is indicating that there is a spike in deposits from large holders. We have gone all the way from a ratio of 39 into a ratio of 1, which is the perfect equilibrium of deposits versus withdrawals with this stochastic view. You can see that there was a spike of 21,000 deposit from large holders. The last time we have a situation like this was roughly around 95,700, and since then there was a very shallow distribution that eventually ended up dropping the market from 97 all the way to 78, and that was at a point where we had a distribution of 51,000 in a deposit minus 21,000 of a withdrawal, giving us a 30k delta that pushed the ratio into 1, just like we are seeing in here, but this time is 20,000, so it's 10k Bitcoin less. Still, this could be a distribution, and I promised in my video earlier that we were gonna look at this indicator to see if that deposit eventually matches an equivalent size of a withdrawal, and if that happens during 24 hours, we could see this cooling down back at the same level. Maybe by tomorrow, this ratio of 1 is gone, in which case it's a false alarm. So let's get serious and let's look at liquidation levels. Is there really an opportunity around 80,000 tonight? I know that many of you are thinking, is this a time to re-enter? Are we gonna miss a V recovery into 89k soonish? So let's look at the detail. Let's go back into forensic mode, deep surgery. And what we are seeing here is a bear flag, right? So we are trying to bounce very humbly in this area, but we are encountering resistance at 82,000. That was once support, all this area from the 31st of March. We have the CME gap somewhere around level 2, And if you're really desperate to enter in a deal, you might get lucky and we might regain support at 82,000 and then go and close the gap. And that will literally turn into a move of 4%, maybe slightly less, depending on how we translate the CME premium into prices in Binance. But what if the price first go lower and it takes the liquidity of 81? Could it be that it just takes 80.5? Because that's the point where we end with the red and it used to be support around here. Or could it be that we just take the whole chunk in here that ends at around 78,700 and then later we go for that CME gap at 85,000? Something similar to what I was explaining in the previous chart. So whichever is the option that we are assessing, we need to always consider that there is a target at the moment towards 76. So if we are entering too early with low volume, we need to have also volume somewhere and we need to be smart about it because it could take a while to close the gap. Most of the gaps get closed very quickly, but not all of them. If you don't believe me, remember that this gap took from 11 of November up until the 10th of March to close, and some gaps never close. Let's look at that liquidity on CoinGlass, and you can see that it's right there below the price. So I find really crazy that we are just hovering 81,000 and we still haven't taken that liquidity right there. This is the liquidity from the past week. We already took the highs and now we have pending to take the lows. Going to 85 doesn't really help us that much in terms of liquidity. There really isn't that much there. There is just the fair value gap together with the CME gap. Both of them provide some liquidity and motivation to go to 85, but let's also remember that the CME gap is just a $300 gap. It's not a huge one, whereas the fair value gap is quite decently sized. Here you can see where it is, and at the moment we have now two fair value gaps, so I'm gonna stretch the vacuum measurement a little bit below. Now it's just 6.8k distance to the 75k that is right below this vacuum. If we go just into 83, of course we wouldn't be able to close the gap, but maybe we can form a better head and shoulders if we do that by doing this. At the moment I'm considering this the right shoulder, but you can see that is a little bit too small relative to the left one. In that case, if we just go to 83 and we form that shape, we still leave both the fair value gap on the table and we also leave the CME gap on the table. And that's why an entry here, if we are targeting that liquidity there, I'm talking about an entry at 80 or maybe at 79 point something. If we go there, it needs to be a very quick wick to the downside that gets bought up immediately so we don't break down the bearish pattern and we have some chances to go to the CME gap. If we just go to 83 at that point and we don't take the CME gap, if we come back to the neckline, then we get enough momentum to at the very least go to this fair value gap at 75, and we are back in that conclusion that if we want to play with fire and enter with a small volume order in here, we do have, it's pretty much mandatory to take in consideration the risk of taking this gap with a second order and to consider third one in case it's needed. Also on this end, in earlier videos I explained how the RSI 4 hour, if it does a full reset, it can take us into this range in here as well. General markets on the close are looking pretty ugly. You can see that now we are at 30 on the VIX. This is the highest we have been since August in 2024. And we can see the Nasdaq breaking down, S&P breaking down, Russell almost completing our bearish target, and the Nikkei pending from my second neck at 33,000. Remember that currently we are talking about a target to 27 if we break down, if we fulfill the full target. Of course, we have broken down already from the neck of 35. All stocks pretty much close in the red. Nvidia is putting a new low, Amazon, and even Tesla is giving away in post-market the gains of the week. Palantir breaking down, Microsoft and everything. MicroStrategy as well. So it seems very impressive at the moment to see Bitcoin still hovering above 80,000, considering that general markets are doing so bad. And I'm really wondering if these whales are really preparing to dump, or they're just putting the finger in the trigger just in case general markets hit a level that they just consider too much risk. Let's look at the order book and let's sniff around and see what the hell is going on with the orders. You can see that there is appetite to buy 80,000, or at least there is a huge ladder of buying orders below the price, which has me suspicious at the very least, because this could be rug pull. Of course, it could be just manipulation. Also, they have pulled out these orders that were very close to the price and they left them at 95k. There is now just 28 million resistance at 88k, but then there's a huge vacuum of resistance. It's kind of the opposite that we were seeing before. So why are they protecting 80k so much is my question. And you can see on High Block Capital that we are seeing a similar picture with the bidding. They went to 17 bid ratio versus ask, and they consistently remain at the highest. This means that we have the highest concentration of limit orders to buy from 81 and below at the moment of the previous range. Of course, we had more than that before at 26. That was on 10 of March. And that marked the local low in here. And I will expect that this price goes lower. This 0.1 that we currently have in the bid could spike to over 0.2 very quickly. Of course, that usually happens as a reaction of price going slightly lower. And that is the thing that has me thinking, maybe my first order should be slightly below 80k. Other things that are going on in here: gold, global longs and shorts accounts on Binance. The bottom information occurred when they were at around 67, the opposite. And that was the bottoming in all this area. And after they pull out to 45, when there was a rug pull, we went back into 66. Same number that held the price. What's going on? Why there is so much interest at 80k with a general market that looks just so ugly? At the moment, the shorts at a higher risk with 260k. I think that's petrol enough to get into the CME gap. Not that much really, but the combination of the extreme fear with 66 longs and now 12 bid in the order book and all this ladder below the price. Let's go into Trading Light and let's see what we can find. On Trading Light, I am not necessarily seeing so many orders, so I wonder if Fire Charts is having some issues. I can see a 600 level here at 80.8, but that's it. I don't see that much, and I'm looking at USDT M on Binance. The level that stands out below the price is 72.5. Interestingly, we have seen a big change. Let's see if you can spot it. We have this level of 66 from 10 of March, and today, 3rd of April, they move it up to 72. Coincidentally, well, we have the selling order at 89 when there was the pump that was also removed, so I don't think that is very important. So this is how it looks, the live order book. Unfortunately, I don't feel like this is confirming what we have in here. Let's refresh. So after the refreshing, I'm seeing precisely the same on Fire Charts, which is a decent chunk of liquidity. Actually, I think I read it wrong. It's not 80 million, it's 80,000 the level with 38 million. My God. Let's look at the 30-day liquidity. And yeah, there is that 81 liquidation level. Then we have at 84 that could help to go to the CME gap. And then we have the 89 that is still immaculate after so many tries. Guys, if you want to trade Bitcoin without needing KYC, consider opening an account on Bluffing. There is a link in the description, which if you can use, you're supporting the channel. And also you get as a reward 10% cashback. Only the first 50 users, and there's still 4 days to take advantage of this. If you want to go with a big exchange, you can also claim 60,000 rewards in USDT if you use my link down below as well. Thanks so much for watching. Let me know in the comments what you think about the setup. Do you think it's worth it, even with a small position? to be part of this potential move into 85K? Do you think we should be waiting for 70s, or are we going to miss the bus? Thanks so much for watching. I'll see you tomorrow. Hit the like, subscribe, write down, comment down below. Have a great night. Bye bye.